What is going on, guys? It is Kyle coming back at you with another video. Today's topic is something that I wanted to make a video about this a few weeks ago. And then I wanted to make a video about it a week after that, and then a week after that, and a week after that. So what am I talking about? Just the economy in general have really slowed down, I guess, to put it nicely. And I figured this would be a great opportunity to discuss the markets. And a lot of people are concerned about investing in the markets right now and what has happened to all the money that they have put into it and all of that hard work that you've been doing to invest every month and save money and not go out and spend it all on food and clothes and whatever it may be because you're trying to invest in your future. Over the last few months, if you've taken a notice to anything that's going on in the economy and the stock market in particular, you've noticed that things have been less than stellar. So I figured that this would be a great time to make this video because yes, the market is down and things aren't great right now. But there are a few things that you can do in order to come out of this on the other side winning. And that's why I'm here today to kind of talk to you guys about that stuff, put a few points in your head to really understand what the most important things are that you should be doing right now to come out of this on top and not think to yourself that this is the end of the world and that you're never going to invest a single dollar into the US economy or whatever economy you're in, because this is going on around the world. You know, the US economy is not the only one that's suffering right now. I wanted to make this video for that reason. So we're going to get into a few points here, some things to think about, some things to take a look at in your own situation, to really understand kind of what's going on and what you need to be doing about it. Now, the first thing that you definitely need to be doing when you're taking a look at your portfolio or taking a look at any of the money that you invested is understanding what your timeline is for needing this money. Are you someone who is 20 years old and won't need to touch this money for another 40 years? Or are you someone who is 70, 75, 80 years old? You've been saving up for a long time, investing in the markets for a long time. Now you're starting to see the performance take a little bit of a hit recently, and you're really wondering and contemplating if now's a good time to just sell everything, keep all your money in cash, and never worry about it again. So the thing that I first off recommend is not to make any rash decisions. We don't need to be going into this with, a hot head thinking, oh my God, this is the end of everything, and I'm never going to recuperate any of the losses. I'm never going to get back to where my portfolio was before. How am I supposed to make money? And if you look at it like this, you should really understand that this is just a common part of investing in the stock market. It really isn't anything to worry about. Economies go through recessions. It's just a part of the economic cycle. If everything was just going all the time, everybody would be invested in the markets and everybody would be driving Lamborghinis all the time. So clearly you can understand why it's just not possible and it's not economically possible to have this happen all the time. You need to understand that this is a normal part of the business cycle and that it happens. It happens a lot. And this is something that you're going to see over the course of your lifetime. If you are someone who's invested since the beginning of the pandemic and all you saw was your portfolio just go up and up and up, this might be the first time that you're seeing it. So you really need to understand and look at it. Do you really need this money? Do you need this money in the next year? If so, okay, well, maybe selling at the complete bottom, like we might be in right now, we might not, but we might be, is the worst time to sell. But if you don't need this money for 20 to 30 years, what are we doing? It's like, why would you even worry about it at this point? Unless it's a company or something, or you're taking a look at it and you're like, wow, I don't really know if these guys make sense anymore. I think that they might go bankrupt. Okay, all right, maybe then you might want to consider, exiting your position and going somewhere else with your money. But unless that's the case, there's really not any point in making any of these rash decisions. That kind of brings me to my second point. You really want to take a look at the securities you own. And when I say security, essentially it's just your ownership in something like a stock or a bond, something that you have ownership in that you have the expectation is going to make you money. So that's what I'm referring to a security as here. You need to take a look at your securities and understand do they really match your goals? Do they match your risk tolerances, your economic situation? Are you a super aggressive investor, but you're investing in debt and fixed income that's only earning you 2% a year, and it's safe and it's going to earn you that 2%? But if you're of the age, a younger age, and now is the time to really invest in some of those more aggressive stocks and look for capital appreciation, then you might need to take a look at your portfolio and start to reallocate and think about it in that way. You need to kind of take a step back and look at your portfolio, and this is really a very important part of just creating a portfolio in general, is taking a look at your age, your risk tolerances, everything like that, understanding the type of investor you are. Are you someone who hates to see losses? Okay, then maybe it makes sense to look into more fixed income, something that isn't really going to fluctuate like the markets are seeing right now, and it's going to earn you that steady return every year. Or are you someone who's willing to take a little bit of risk in order to have that potential for huge growth in your account, where you might be seeing 10 to 20% growths in your account, right? But on the flip side, you might see 10 to 20% drops in your account in some years or some periods of time, like what we're seeing right now. So it's really important to understand, take a look at where you are in life, what your situation is, understand who you are as an investor, and really start to understand what your risk tolerance is, okay? And take a look at your portfolio and understand if it's really fitting in with that. Because if you're here and you want to be here, you're looking at what's been going on in the market all around, and you might be considering, wow, I need to sell everything and start fresh. Now, well, you might think that that's a good idea to get from point A to point B where you want to try to be, but you need to understand that if you do that and you start to sell things at a huge loss, then that's just, cementing those losses. You haven't really lost money if your stock drops from $100 a share down to $50 a share. That $50 difference, you aren't realizing that loss until you actually sell it. So what you might want to consider doing is selling little bits and pieces of some of your losses. Start to slowly reallocate into that portfolio that you're trying to create. Take a few of those losses. And this is something where, we could get into all the nuances of tax loss harvesting, which essentially is where you take your losses and you write them against your income, and it lowers your overall income so you pay less tax. We can get into that in a different video. But what you need to understand is that if you start to slowly take some of those losses, move towards that allocated portfolio that you're trying to create, but not do it all at once, slowly over time start to move things over. And as the markets come back up, you start to see more gains. You can maybe sell at a gain, make a little bit of money, and then start to create that portfolio that you want to do. Something to consider. Another thing you need to really look at if you're looking at the performance and seeing that a stock you own or something you own is down 20% or even worse for a lot of companies, I want you to take a look at the overall performance of that stock over the course of 1 year, 5 years, and 10 years. And tell me what you see. Because if you're looking at a stock, and granted, that needs to be a stock that's been around for that long. So you need to take a look at a stock like Apple and say, okay, well, Apple is down 20, 30, 40% right now from the start of the year till now. But what has it done in the last 5 years? You'll look at that graph and you'll just see it going up and then drops. And then up and up and up and up, and then it drops a little bit more, and then up and up and up. Okay, so if you're playing the long game, which is what I recommend to basically everyone who is investing and is a beginner and doesn't want to get too involved in things, buying and holding that strategy, then this is really something that you should be taking a look at. It gives you a little bit of perspective, which I think is super important since it's such an emotional game you're playing with investing. The emotional side of it is just important as the action in buying the stocks and everything like that, right? So when you start to see your portfolio drop and you start to see all those gains that you've made and you see it all quickly evaporate away, it's emotional. It's tough to look at. So what you should be doing is taking a look at the overall performance over a longer period of time and understanding, okay, if I stay in this stock for another 5 to 10 years or even longer, then these are some of the things that I can look forward to. in the long run. So I think that that's really an important part of it. You know, playing to that emotional side of you when it comes to investing really does go a long way in helping out. Okay, so now I wanted to get into a couple of the actionable items that you should be taking at this time. Because obviously, you know, it's all well and good for me to just talk to you and say everything is going to be okay and that you're going to make $1 million and everything's going to be fine. But what you really need to start doing is deploying a little bit of action and understanding what you need to do at a time like this. So granted, I'm going to be speaking on behalf of people who are, you know, in that age group where they're going to be investing and they're still looking to continue to put money into it. So basically anyone under the age of 65, this kind of applies to. But if you are of the age where you're really, you know, in the prime of investing, you know, your 20s, 30s, 40s, 50s, like you should be putting money into the stock market as much as you can. And when I say the stock market, you know, I mean to speak a little bit more broadly than that and investing in other avenues too, because I believe it's important to invest in areas outside of the stock market. But I'm just going to say investing in the markets in general. But you should be taking this as an opportunity to buy. You really should be, because we're seeing super discounted prices, you know, prices that might even be lower than what you saw during the beginning of the pandemic. So a lot of these companies have just gotten absolutely battered and have become really, really undervalued. So doing your research and understanding the companies that you believe in long-term, and even just getting into something like an index fund, you know, where you're not necessarily investing into just one company or a selection of companies, but instead you're investing in the broader market. And, you know, you might have a firm belief that the US economy or whatever economy you're in is going to do well over time, right? So you look at it with dollar cost averaging, and essentially the whole theory behind that is you buy in at lower prices and you sell when they're higher. But if you're not selling, you're essentially just keeping your cost basis, which is the average price that you're paying for a security, lower, and then you're going to see more of that capital appreciation, right? So if you buy a stock at 100, you buy it at 120, you buy it at 90, your overall cost basis is going to stay low, and then you hope that that stock, you know, continues to take off and go out 130, 140, 150, keeping your costs low, and that you can hopefully make some money off of it, right? So that's kind of the whole point of doing that. But continuing to buy, setting up a routine where you're automatically, something's coming out of your paycheck every month, it's going into your accounts, and you're able to invest that way, I think is the best way to look at it. That kind of speaks to the action that you really should be taking directly, but the next action that you should be taking is extremely indirect, in the sense that this isn't something that you should be monitoring every single day. If you're looking at this stuff every day, and trust me, working in finance, it kind of forces me to look at it every day, becomes a little bit of a curse, because I've always been the type of person that likes to invest, let it do its thing, don't look at it, check it every so often so you're familiar with what's going on, but really just let it ride, right? And this is kind of one of the things that I recommend to people, and this, again, plays to more of that emotional side of it. If you're checking it every day and you see drop after drop after drop, you're just going to be like, what am I doing here? And really start to debate, is this really what I should be doing? Am I investing right? You know, am I investing properly? Why am I losing so much money when this is something that people tell me that I should be doing? And this is a good thing, but you just don't feel like it's working. So I recommend that you don't check it all the time. You know, set up maybe once a month or even less than that, depending on the type of investor you are, and go from that angle. Don't be looking at this as something that you need to be actively managing every single day. Put your money in on a routine basis, invest it. Don't look at it as anything else other than that. Don't make any decisions emotionally. You know, I don't want you selling something because your Uncle Jerry said that stock is going to go to zero. Uncle Jerry doesn't know what he's talking about. Or even if he does, he doesn't know if it's going to go to zero, or it's going to go to 1,000, or what it's going to do. So just continue to invest and stay the course, guys. That's going to really be it for me. I hope this helps you guys. I know that it's tough to watch some of this stuff happen, and trust me, I'm going through it too. You know, we've all only really been seeing gains since 2020. So it's tough to go through it. Just understand it as a normal part of investing, and you're going to come out of this on the other side good to go. So that's going to be it for me, guys. If you enjoyed, consider dropping a like down below. I'll leave my socials in the description as well. Connect with me on LinkedIn, Instagram. If you have any questions, leave them in the comments down below. Until next time, I will see you guys later. Peace out.